So here's our courtyard case study. This was our very first deal. 25 units. I always tell people you need to think big, but you need to start small. Start any size you think you can get your hands on. 25 units was for us. It had 1-bedroom cottages. It had 4-plex buildings on there. And this was a typical cottage. We use creative financing on this deal. So the parameters on this deal, we put 10% down. So everyone's wondering, how do we get into this deal? The price was $600,000. We used 10% down, which was a $60,000 down payment, and 10% seller financing. The owner held 10% as a second mortgage. So $60,000 was a second note created. Seller repairs, over $10,000 in siding and roofs a week prior to closing. These were mom and pop owners. At the time, we didn't even know what a mom and pop owner was. We came up with that term. They're just motivated. They're burned out. They wanted to close. And they said, you know what, we'll fix a couple of roofs. We'll do a little bit of painting. So we're able to get a lot of that done before closing.
Yeah, and time again, we see people that someone told them, hey, get into multifamily. It's a great tax shelter. You're gonna make a lot of money, and then they don't treat it like a business. And we're here to tell you this is a business, and you need to treat it like a business because we buy from the people that don't treat it like a business. They get burned out, and there's a ton of value to go in and buy and renovate these properties and hold them for long-term generational wealth.
So there's a lot of issues with our first deal, right? And the bottom line with buying any business or getting something of value is you have to buy something where you can add value to it. So look at all these issues. And now you might think of them as problems, but you're going to see that they are actual opportunities to be able to add value. There was a lot of deferred maintenance on this property. Deferred maintenance is basically something like a gutter hanging out, not taking care of the landscaping. There's a lot of painting that needs to be done, power washing. There was a lot on this property that needed to get done. It wasn't expensive. Mailboxes, roof patches, a lot of it was just deferred. They weren't taking care of it. We knew that if we did it, we could raise rents and take care of the property. The next one, the tenants could rent by the week. Weekly renters, it was more of a transitional housing kind of thing where they would come in and stay for 2 months and then leave. A lot of tenant turnover, and there was no tenant screening. Some of the tenants were dealing drugs in the property, and at bottom line, at the end of the day, this was a poorly managed property by negligent mom and pop owners. They had no systems in place. They had no website. They had no application fee going on. They were just trying to rent to whoever came by, and they had no systems, and ultimately it burned them out.
Yeah, and it wasn't, we don't buy in war zones. We don't want to give you that impression. This was a B plus area, but this was the problem property in the area because the landlords were just not keeping it up. So we knew the area was good and we knew that it had potential. We just knew that taking over and doing the right thing on the property was needed.
So what were the solutions? I mean, the first thing we needed to do was to tackle the deferred maintenance. Deferred maintenance issues were addressed on this property. We began doing tenant background checks and we evicted all the undesirable tenants. This was the heavy lift here. We ended up going from weekly renters to monthly renters, much more stable tenant base, much more desirable tenant base. And you know what? You can have 2 tenants in the property. If they're not paying, then you don't have any tenants on the property. These tenants that we started bringing on board and onboarding, we started doing our background checks and we started getting very good tenants on the property. The next one, we implemented professional management with maintenance persons. So what happened was Jake started managing the property full time, and it was great for him. Driving around in his sales job, would stop by whenever he had a chance. We'd have 25 units. A lot easier to manage a 25-unit property when you're working full time than it is to manage 6 single-family homes spread out. I remember Jake going at Friday at 5 o'clock. He's like, "Yep, you know what? It's check day, rent day." So he'd stop by the property and collect all the rents. It would take him a few minutes because everyone was there. So think about that when you're thinking about multifamily.
And it all goes back to mindset. We were talking about mindset before. When we first bought this was the biggest deal in the world to me. I was like, oh my goodness, we have 25 units. I would walk around thinking that we're some, real estate magnates or something. But now 25 units is small because you realize that more is possible and you get into it and you start to put the systems in. So I'm telling you, so much about this game comes down to mindset.
Employed premium rent pricing and monthly payments on yearly leases. This is the part of the deal where you start creating a business. And much needed online presence. We started putting ourselves online. We created a website. We started using Craigslist for ads. We started using the web to our advantage.
Yeah, and the classic term in real estate is location, location, location. Well, I'm here to tell you with the internet and apartments.com and Craigslist and all these other resources, it's about vicinity, vicinity, vicinity. If you're in the general vicinity, people are going to be able to find you online. They don't need to be able to drive past you any longer. So for apartments, think vicinity, vicinity, vicinity.
We've got to coin that term, Jake. I like that. Vicinity, vicinity, vicinity. That's a good one. And what ended up happening? We got an entirely new desirable tenant base. We started marketing to the tenants we wanted to market to, and we started signing them up. So here's a value play. We also had 3 unused storage units to the current tenants. There was a lot of garbage in these storage units. We cleaned them out and we started renting them out. Another huge value add, they were giving cable for free. So we knocked off cable at $6,900. So if I do a quick calculation, let me get my calculator out here. If I take $7,000 savings and I divide that by a cap rate of 7%, we just added $100,000 in value to this property just by removing a $7,000 bill. Now, if it's at a 6 cap, let's see how much value we have at a 6 cap. I just added $116,000. So as you see, every time you're increasing that net operating income by increasing income or decreasing expenses, you are taking control of your financial freedom. Very important point in multifamily. The next one is we reviewed and renegotiated all service providers and contracts. I want Jake to share the story with you about the most recent deal we just did. We closed on a 243 unit deal a couple months ago. Jake, tell them about the garbage story. I mean,
yeah, I'm not going to name any names because there's certain companies that are definitely higher than others, and they don't seem to really, have a customer focused approach. We'll say it in a nice way. And every time I see one of these properties that this specific company is on, I know I start thinking ching 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 ching, because the minute I go in there, I know they're overpaying for garbage. And so literally we just renegotiated a contract with the prior company that was on there, and it saved us $18,000 a year. Now, Gino, you're talking about 6 caps. You're the mathematician. That's big money, right?
I'm excited. I didn't want to cut you off there, but $18,000, if you're taking it at a cap rate, go up and look what the cap rate formula is. It's $18,000 divided by 0.07 cap rate. You just added $257,000 of value to your property just by renegotiating one contract. What about the laundry contract? What about the cable contract? What about raising rents? What about decreasing other expenses? There is so many different ways to take control and create those multiple streams of revenue in multifamily that it's just exciting to me. $257,000. That was a good payday for Jake. You know how many pizzas, Jake, it would take me to make $257,000? Be a lot of pizzas.
That's a long time. That's a long time.
And the last one is we implemented something called utility buyback system, which we call RUBS in multifamily, ratio utility billing, where these landlords were actually paying for all the water and they were paying for the utilities. When we took over, we started implementing and started passing those costs back onto the tenants.
Yeah, and just to reiterate what Gino said, I didn't know about all these businesses within a business before we actually got into buying apartments. There are so many other ways between, like he said, he was mentioning the cable contracts and then the cell towers and the laundry contracts. It's just there's all these ways that we get paid every month that it's almost mind-blowing. If I showed you the spreadsheet of the different ways that I get paid from the different entities every month, it would blow your mind. I think it's like close to 40 different ways right now that we're getting paid every month. So it's a pretty interesting business, and it gives you a lot of diversification.